Hello, and a warm welcome to this Your Overseas Home webinar, Your UK Pension in Spain, how to ensure you get everything you're owed. Today, we're diving into a topic that's essential for so many of you planning to retire or relocate to Spain, how to manage your UK pension and make sure you receive everything you're owed. Whether you're watching live or catching up on demand, it's great to have you with us. And also, although it's titled UK pension, a lot of what we say will apply to other countries too. So do stay tuned. My name is Christopher Nye. I'm senior editor at Your Overseas Home. I've been helping buyers move to Spain for over 20 years, and I know that financial planning, especially pensions and tax, is one of the biggest concerns when moving abroad. That's why I'm thrilled to be joined today by Remy Hart, Senior Wealth Manager at Holborn Assets. Holborn is an award-winning financial advisory firm, and Remy specialises in helping British expats across Europe make the most of their savings, their retirement planning and pension income. So, Remy, would you like to introduce yourself and tell us a little bit about your role at Holborn Assets?
Christopher, thanks for having me. Always a pleasure to join in with Your Overseas Home. A great organisation and good that two large reputable companies can work together. So yeah, enjoy doing these and helping out where I can. So as you mentioned, a senior wealth manager at Holborn Assets, newly offered head of wealth management, as I just mentioned pre-webinar. I specialise predominantly in savings, tax-efficient investment vehicles, pension planning, tax planning, estate planning, and overall sort of the transition from the UK to Spain, for example, or whatever country you're in, and help with that moving process from a financial planning aspect. But yeah, most sort of points covered from ourselves here at Holborn.
Excellent. And I do know that there are small mistakes that can be very expensive for people. So I know how important it is to get these things planned out right from the start. Now, Remy has a presentation for us, and after that, we'll open the floor to questions. If you have a question at any point, just type it into the questions tab on the right-hand side of your screen. If we don't have a chance to answer them all, we'll make sure any outstanding questions are passed on to Remy and his team. And just to get you clicking, and using the tech, we were wondering how many people plan to keep a property in the UK if moving over to Spain. So just type in the questions tab, keeping a UK property or selling up and not keeping a UK property. That'd be really interesting. So I'm going to hand it over to Remy with his presentation. Thank you.
I'll try and make this a bit bigger so everyone can see. So a good question there, Christopher, and people will always be considering selling their main residence. I think another point to that question is if you have secondary or third properties in the UK, what's the plan around those? We have a lot of conversations around comparisons on keeping those and creating an income compared to looking at perhaps Spanish tax compliant savings vehicles as an alternative. So something to be mindful of. A little bit about myself. Again, I just touched on, I'm based in Spain myself. I head up the Spanish office here on the South Coast. Fully qualified financial advisor. I think that's important for anyone dealing with an advisory firm, not in the UK or in your home country. It can be a strange place or a nervous conversation to begin. So you make sure you're working with a qualified advisor and a reputable company. There's a lot of reasons I work for Holborn Assets. We're one of the largest expatriate wealth management companies globally. I think we have 18 international offices. I've been around 27 years now. And yeah, look, as a company, we specialize in many different areas. It's from general sort of savings, looking at fixed interest accounts, to investments, and that's more around the wealth tax structuring of the vehicles from an investment point of view. We have an alternative investment arm where we have property investments, pensions, more around what can be done with pensions, how to maximize pensions, how to have more control over pensions, and then a sort of citizenship arm to the business as well. But today we are talking about Spain in general. I think some people are umming and ahhing on, and I always get the question: Spain or France, Spain or Portugal. From a tax perspective, there's not too much different. Portugal used to be quite tax favourable, but comes more down to preference. I don't think we need to go into the ins and outs of why Spain. We'll move quickly on to the important things. Now, just to be clear, guys, and people watching today and the recording, I'm a qualified financial advisor. I specialize in certain aspects of your financial life, and you know, I'm not an immigration lawyer. I'm not a qualified tax accountant, and I certainly don't work for the HMRC in the UK, but I have a lot of experience in this, in that transitionary period from the UK to Spain, or from your country to Spain, or France for that, or Portugal for that instance. But you know, if you've got any questions, queries around what type of visa support, how you get into the country, then you know, send them my way. It's going to be on an individual basis, and we'll point you in the right direction. As per Your Overseas Home, they have some great contacts in the immigration space in Spain, and they'll be able to help as well. A slide here on tax and residency. I think it's important just to be mindful of, and you know, I imagine a lot of you on this call, as far as have an idea of moving to Spain, or you're in the process of moving to Spain, or even recently just moved to Spain. The things to be mindful of really are the different tax years. And like Christopher said, when it comes to potentially selling a house, the timing on that's got to be important. You essentially don't want to pay capital gains tax in Spain. Simply put, Spain are going to tax you on your worldwide income. Things that may be tax exempt or free from tax in the UK, like selling a house from capital gains or taking a pension lump sum, which I'll touch on, they're going to be tax-free in the UK, but they won't be tax-free if you become a Spanish tax resident. So, for example's sake, like it says here, Spain's tax year is a calendar year, January 1st to December 31st. UK is obviously April to April. If, for example, in 2025, you've already spent a few months in Spain, you're then planning to spend the rest of the year in Spain, you're going to come under the 183-day rule and be viewed as a Spanish tax resident. That's where the issue comes. If you sell your house in 2025, you're going to be liable for capital gains tax in Spain. So it's just important to get the timing right. If you are planning to sell your house this year and you've spent a bit of time in Spain already, just ensure that you get under the 183 days for the remainder of the year. You'll then become a Spanish tax resident as of next year. Similarly, if you're looking to sell your house at some point next year, you know, general advice is to try and move after July the 1st. So you become a Spanish tax resident technically the following year in 2027. Again, I'm not a tax advisor, but I've certainly been through this many, many times. And I'm happy to sort of guide you through that process. Just ensure all the timings are correct. Look, there's a double taxation agreement that's useful for other incomes and other interests you may have and other assets you may have. But as far as selling a house, being completely exempt in the UK from capital gains on your main residence, that's not going to apply in Spain. And similarly with pensions. I'll jump straight to it because there's a point here. Tax-free lump sum in the UK is always tax-free in the UK unless you become a tax resident elsewhere. Now, depending on where you move, you know, there's tax favorable in jurisdictions, but Spain will tax you on that lump sum. They view that as worldwide income. It'll be taxable on your marginal rate, whether that's 19 to 28%. So the simple advice, guys, is to take the tax-free lump sum. I had a conversation this morning, actually. Client just moved, not sure if he's going to take the tax-free lump sum. Back and forwards for a bit. It's not my place, but the comparison is taking tax-free money from a pension, or taking it in 10 years' time, 20 years' time, or on an annual basis, where you're paying 19 to 28% tax bracket. So you can have access to the money as a UK tax resident, completely exempt from tax. In my opinion, there's no reason to not take it. You can simply put the money in the bank, or look at a really basic Spanish tax compliant savings vehicle where you generate a few percent and there's no tax to pay on that income, or negligible if you start taking an income from it. So look, as far as UK pensions, state pensions taxed similarly. Again, it can be drawn into a Spanish bank if that's what you desire. Can be taken into a UK bank if you're going to keep a UK bank. You will be taxed. Again, there's a double taxation agreement. You're never going to pay tax twice. Workplace and private pensions, again, they can continue. The again, this is one more for a tax advisor. And once you're in Spain from a reporting point of view, you're never going to pay tax twice. So whatever if tax is withheld at source in the UK, you still have to declare in Spain. Now, if you owe tax in Spain, you'll just pay the difference. If you're under tax, then that'll be offset and you'll get a tax claim back. But again, it does require, you can do Spanish tax returns yourself. I don't. I would get a professional involved, depending on what level of incomes and what assets you have bringing in income in Spain. It can be a bit of a minefield. So look, we can support you on how you take your income pre-move and what it will look like in Spain and what the alternatives are, because some people will have dividends from a UK company as far as their salary, for example. And I've just been through this as far as a case study without naming names for data protection purposes. He realized the money from a UK house bought in Spain had leftover cash. We generated 5% off that leftover proceeds, and we stopped the UK dividends. They just carried on into his UK company, and we got tax efficient income in Spain, compared to taking money from the company where he was paying a nominal rate of 25%. Again, this is part of the pre-planning and part of us supporting you on how you have your assets structured at the moment, where you want to be, what your objectives are, what your income requirements are, and analyzing how best we can structure the assets or where best to take money from. Again, touching back on properties, I don't think we have a slide on that, but again, I had another conversation recently, selling their main UK residence, still have a rental property with a bit of a mortgage, wanted to pay off the mortgage, had an offer on the property. They're taking income from that rental property, paying the progressive tax rate, which, as I said, can be 19 to 28% on the income. I'm not telling you to sell your houses and not invest in property. I invest in bricks and mortar myself. It's a solid investment, but it can be a tax burden and can create you tax liabilities moving forward. It does swell your estate from a succession point of view, but my advice there was to sell the rental property, take them up on the offer. It was a good offer, and just invest that into a Spanish tax compliant savings vehicle. Much lower risk, no void periods, no maintenance issues, no agency costs. They just wanted regular income into their bank account. Most of my clients want to sleep at night, and that's what we try and help people do. So I think, Christopher, we touched on this prior to the meeting. There is certain agreements in place regarding the UK state pension. Spain has that agreement where you will continue to benefit from the inflation growth within the state pension and the income. I think it grows at plus 2.5% CPI at the moment. There is an agreement in place. There are certain countries, Canada, Australia, off the top of my head, that don't have that in place, but you have that protection, and that will be.
It's the triple lock, isn't it? So you get the most of inflation, average earnings increase, or 2%, and at the moment average earnings are going up by about 5%, astonishingly. So our pensions are doing very, very well. I've not heard that the government would like to get rid of that, but the country is short of money, so who knows what they'll plan. But I think at the moment your triple lock is safe.
It's one of those things that can be sort of out of our control, right? That's similarly with rental properties or tax-free lump sums. If we can do that now, then do it, because things may change over time. As far as pension contributions, it's generally 99 times out of 100 a good investment to top up your pension contributions. Obviously, you need a minimum of 10 years to be eligible for any pension from a state pension point of view. Getting a full pension, try and contribute to that if possible. I've been out of the country for quite a while now, but I still do it, and it's a small payment for a regular income for the rest of your life. But I'm 36 years old, so maybe I shouldn't worry about that too much. So this is a slide purely focusing on the international SIPP. Now, without going into this in too much detail, it's going to be more specific to individuals. Now, a lot of questions we get is, we just sold a house, or we've got savings, or we've got ISAs, and we've got premium bonds, or so on. They're not tax efficient in the UK. What can we do? When it comes to pensions, now this is regarding company pensions, occupational pensions, private pensions, personal pensions. the questions come around, what do we do with them? Obviously, first point of action is to take the tax-free lump sum if you're of pensionable age and you have the ability to do so. Then the remaining pot, what options do you have? Now, when I joined the industry in Spain here 7 years ago, there was a lot of overseas transfers on pensions. I seem to skip that a little bit. Now that's pretty much off the table. There's a Labour government have introduced an overseas tax charge of 25%. The Curops, which you guys may have heard of, had some really good sort of succession inheritance benefits, but that's off the table now, and we think it will continue to do so. So, generally speaking, unless there's really good sort of guaranteed incomes, you know, we tend to advise against annuities because you're locking in the pension and it dies with you. But basically, our pension team does a direct comparison on what you have in place right now versus what we could do with it. Now, that comparison comprises of a fee comparison to see what the fee schedule looks like, to see what the underlying assets look like, to see what the options are behind the pensions, what regular income can be taken from them, and then we look at a comparison. But as I said, nowadays, all we're looking at is an international SIP. It's generally the best form of advice, and that's keeping the pension within the UK. So we're looking at a safe and secure jurisdiction like the UK. We're not moving it into Malta and Gibraltar like the olden days. And an international SIP is essentially a self-invested personal pension. It allows you control, flexibility over the pension and what happens within the pension. Allows you ongoing financial advice. Obviously, once you leave the UK, you're not entitled to a UK financial advisor. They can't technically advise you anymore, thanks to Brexit. Essentially, that's where we come in, and we offer alternatives to pensions, alternatives to savings. That's exactly what we specialize in. So the international SIP does have a lot of benefits. You have currency control as well. You can take the money in euros and hedge against sterling and so on and so on. So that's going to be more on an individual basis. You know, if you've got private pensions, company pensions, you're unsure what to do with them, DC schemes, DB schemes, you know, we can always evaluate how they look and what they would look like from a Spanish point of view compared to the option of moving it. That's pretty much it on that. You know, that's a personal basis, and we will happily prepare any recommendations and give more information on that if that's required. I guess part of the presentation touches on savings, investments. I'll sort of fly through this pretty quick, but I mentioned it there. As far as UK assets, and that's the purpose of a one-to-one meeting with someone like myself, would be just to understand what assets you have in place, how they're currently structured, and what benefits they may have or probably don't have when you become a Spanish tax resident, and simply what are the alternatives. A nice way of putting it myself is, I know I'm very much targeting the UK market here, and I know there's a lot of other probably countries here, and if there's US clients on today, then we have a US arm to the business, and certainly that's a different conversation, but please get in touch and we'll get you in touch with the right people. The advice is slightly different there. You keep your assets in the UK, whereas the UK, the ISAs hold no benefit for whatsoever. Similarly, premium bonds and general savings accounts. Now, what we specialize in is ISA alternatives, for example, tax-efficient savings vehicles in Spain. And again, that's more around a one-to-one sort of conversation, working out what your assets look like, what your objectives are, what income requirements you may have, what an investment or savings vehicle means to you, and do you want to pass on money? Do you want to set it up with your partner? Do you want to name your children as beneficiaries? And so on and so on. We're just making life a bit easier from especially firstly, a tax reporting point of view. A simple comparison here is if you have an ISA in the UK worth £100,000 and it grows by 10% in year one, and you say, as a Spanish tax resident now, you want to take the £10,000 as income. Spain is just going to tax you on that full £10,000, okay? Comparison, you put £100,000 in a Spanish tax compliant savings vehicle, can be straightforward, low risk, can be high risk, whatever you want. It probably won't make 10% a year if you're in a low risk one. But for example's sake, again, you put £100,000 in, grows by 10%, you take out the £10,000 at the end of the year, you're only going to be taxed on the gain element. Now that's important because your taxable withdrawal is going to be £1,000 of the £10,000 of that £1,000, you'll pay the nominal rate. So it's a significant saving, and something I can explain probably clearer or send more information of on a one-to-one basis. We do have a property investment arm to the business. We can always look at that. If people want to, Spanish compliant bond, I think this is probably what I've just touched on, currency flexibility being the main one. If you're releasing funds in the UK, it can be set up in sterling or euros, obviously going to be living in Euro lands. I'll touch on currency in a minute, but tax deferral, Spanish, ensuring your assets are under the Spanish tax and legal framework is also important, right? From a reporting point of view, all of our Spanish tax compliant savings vehicles are reported directly to the hacienda. If you take withdrawals from the policy, it's all taxes withheld at source, it's all reported on your behalf. There's a Modelo 720 that, without confusing too many people, there's Modelo 720 which needs completing. Any assets over and above 50,000 euros worldwide need to be declared. Our vehicles do that for you. From a non-lucrative visa point of view, the Spanish tax savings vehicle really ticks the boxes. It shows has sufficient savings for the visas and the renewals, and also the income from it. Having assets overseas generally would be okay. If you've got 100 grand in the bank in the UK, it's going to suffice. Got it in a Spanish savings vehicle, just makes your life a lot more easier. But that's the purpose of our conversations. How can we help? What do you have in place? What alternatives are there? Capital gains tax in Spain. So you got your brackets here. Again, the slide in the presentation, something individual, what you may be looking at as and when you sell assets. Probably not too important as of today. A Spanish compliant wrapper versus an ISA, direct comparison. Again, if you've got ISAs in place, if you've got UK investments in place, it's worth having a chat. I'll just simply show you an alternative based on your individual requirements. There's no cost in consultations with myself and the company. And there's certainly no cost or obligation to take our advice. We don't work in that way. We're quite a laid-back company. We're a big, reputable company, and if we can help, and if we think we can work together, great. We'll prepare any advice and recommendation. We're a highly licensed and regulated organisation. That's the most important thing from client protection and security point of view. And the advice has to be suitable for the client. So, I guess moving nicely on to currency. So as far as currency, it's happening quite a lot at the moment. Sterling to euro, euro to sterling, US dollar to euro. Quite a volatile market over the last few months, and we have a lot of clients come to me and say, "Oh no, it's fine. I'm moving monies. I've got my own digital transfer account." It's just simply not good advice. You're in control of that trade. I've been in the financial industry for a number of years now. I'm a qualified accountant and studied finance and accounting, and traded markets throughout my 20s. Moved into wealth management. I still can't grasp currency trading, and I'm not a gambling man with currency. If you can get a big currency company involved, whether it's small regular transactions, or especially when it comes to buying a house in Spain, and you need to transfer money over, there's no argument against either doing it yourself or asking your bank to do it at their nominal rate compared to using a currency company. Now, Your Overseas Home and Holborn have a relationship with Smart Currencies. Reach out to Christopher, the team. I don't know how that works, but they'll be able to open you an account, and it's a free account. Now, when you open an account, I've done one, you get a appointed account manager, and simply they'll have a conversation with you to see what your plans are, see when you're buying a house especially. The best thing that I've seen with Smart Currencies, and a lot of my clients have used, is forward contracts. So I think the rate at the moment is £1 to 1.14 there or thereabouts. If you're buying in the next 6 months, you can say, I would like 1.2. Sounds quite cheeky, but you put a forward contract in. As soon as it hits 1.2, they're going to make the trades. But again, have a chat with a currency expert at the team. It's a no-brainer. You can save thousands and thousands, especially with property purchases. It needs to be done. And then ongoing income, people bury their head in the sand when it comes to that. You're going to get pension income coming into your UK bank, and then you just transfer it into your Spanish bank. The banking rate is ridiculous. It's never going to be a nominal rate. It's never going to be, you get the charges involved as well. but just set up a currency account. Monies can go into your currency account. You get paid directly into those and then directly out of those. You can set up direct debits. You can be in control of it. I'll stop talking about currency because smart currency are the people to talk about there. And I recommend having a chat. So as far as any savings, pension, tax planning, estate planning, succession planning, I'm open to have one-to-one conversations with anyone who's in the process of moving to Spain. Whether, again, if you're coming from the UK, coming from Ireland, coming from Europe, coming from the US, if you're coming from the US and you're watching this recording or live, please send me an email to that email on the screen right now, because we have a US specialist department and the advice is just different. Now, we have US qualified advisors who specialize in cross-border advice, and they'll be happy to help. And I'll send over links to diaries to schedule free consultations. But look, the purpose of a follow-up meeting would just be to introduce perhaps myself in a bit more, and the company in a bit more detail, run through your situation, your plans moving forward, how your assets are structured, what your income's going to look like, and so on and so on. And look, I'll cover up any questions I can, as much as I can, by not being a qualified tax advisor or immigration lawyer, and so on and so on. So, Crystal, I think we'll open up to a bit of the question and answers, if that's okay.
Yeah.
That
Sure.
QR. Sorry.
So let me just check the QR code. Show it works. Yep, there you go. I've gone straight through to your Calendly thing, so it works. So just click the point your smartphone at that. How it works if you're on a smartphone, I don't know, but I'm sure there's a way.
Just open up your camera and then put it onto the screen. It will take you to the link. You might see my diary is a bit blocked out next week. I am in France seeing clients, but whenever you're convenient for yourself, put a call in my diary. It will go automatically to a Zoom meeting, a half an hour slot, and happy to speak to anyone.
Great, and just to confirm that half hour meeting, that there's no charge for that. That's just a
No charge for today's meeting, no charge for a free consultation. And look, as I said, if I can help and prepare any advice, there's no cost for that as well. But there's also no obligation or commitment. It's a very hands-off approach. If we can help, great. And if we can work together, great.
Excellent. Okay, so let's go through people's questions. So just to answer the questions that I posed, are you going to keep your UK property? Or are you going to sell it? Kate's selling up. Katrina's selling up. Heather's going to keep hers. Gail's going to sell up. Anthony's going to keep his. Peter's selling up. Sandra's selling up. Kathleen's selling up. So Ken's keeping his. Paul's keeping his. So I'd say about half and half there. I guess one question that occurred to me while I was listening was, would you be giving different advice to people if they were planning on coming back at some point than if they were definitely going and never coming back? Is that something that you need to think about before you start, or doesn't it make any difference?
Yeah, it's very common. It depends on time frame really, because if someone's planning to move to Spain for a couple of years, do we really want to sell properties? Do we want to liquidate ISAs and take tax-free lump sums? It takes away the urgency and the need for that. If you're planning to move back to the UK in 5, 10, 20 years, and you always want it as an option, then absolutely the advice sort of changes, right? We can get it in line with the Spanish tax system, but most of the vehicles we recommend or use are internationally portable and actually have some benefits of returning to the UK. So properties are a can of worms, right? I'm not going to tell you to sell your main residence you lived in for 20, 30, 40 years. If people want to base in the UK, great. If you're keeping it for investment purposes and want to rent it out, again, there's comparisons. I have these conversations quite a lot. When people get to a later point in their life, they're retiring, moving to Spain, they say, yeah, I just want a house in the UK, somewhere to visit my daughter. How much, and the grandchildren? How many times are you going to go back? 3 times a year. Well, if your house is worth £400,000 and you can generate 5% quite comfortably, £20,000 is going to get you a few nice hotels and flights on 3 times a year. So again, it comes down to preference and planning as well. Yeah.
Okay, so let me just ask some of the questions that people have asked. So Michael's asked, I don't have a property in the UK, but I do have a property in Tenerife. How does this affect me? He's got both a private and a government pension.
Depends completely where Michael spends his time. As a tax resident, is he taking his pensions, not taking his pensions? Is he a Spanish tax resident? That's certainly a conversation to be had, and I'll happily help.
Okay.
Yeah.
Okay, Brendan has asked the question I posed right at the start, so I will just ask it again, just in case anybody didn't hear. Is it true that if I move to Spain, my UK state pension does not increase annually?
I think we've covered that. Yeah, it will. Yeah. It's part of the agreement, and will continue to. Yeah.
Yeah, so it will continue. So it's at these places like Australia, Canada, for some outrageous reason, they don't get their pension increase. Well, whether it's outrageous or not is for you to decide. Ken has asked, for worldwide taxation, are you taxed on the value of your assets, e.g. UK property, whilst unliquidated?
No, it's just a declaration. You have to declare it on your Modelo 720. Anything over 50,000 and above. There's no real issue in Spain unless you're realizing money from an asset. If you have a property that's worth £1 million and in 5 years' time it's worth 1.5 million, until you sell the property, there's no tax liability there. So okay. I hope that sort of covers that.
Sure. So we've got more tax questions than pension questions at the moment, but I'll ask them. And bearing in mind you're not a tax advisor, but they do impinge on pensions. So Anthony's asking, how much is the capital gains tax in Spain on a UK property if my Spanish property is in the region of Valencia? I'm not sure you're going to be able to answer that one. How much is the capital gains?
Assuming Anthony is a Spanish tax resident, lives in Valencia, now plans to sell his UK property. So yes, again, the timing of it, I'm going to say it again, I'm not a qualified tax advisor, and the regions are different. We've got an advisor based in Valencia and a lot of contacts there. So if you want a cross-border tax specialist, by all means, send me an email and I'll pass you on details. But those rates will pretty much apply on the gain element of that property. My understanding is.
Okay. Brian has said, can I move to Spain on an Irish passport? Can I move to Spain as an Irish passport holding English resident at 57 years old and simply keep paying my stamp until I am 67?
Oh, the Irish passport's a really good thing to have as far as moving to Spain. The contributions to the UK, yeah, you can back pay into them. You can't technically work. It depends. If you're going to be depends what your plans are in Spain. But yes, you can contribute to a state pension. Yes, you can move to Spain under an Irish passport. They're a very favourable document to have, and a big queue in that office at the moment. So I guess yes is the answer to that.
Yes, I must admit, I've got my application sitting here for my Irish passport here too. Okay. I think that might be one, Brian, to organise an appointment with Remy, because I know we can help you, but it's a little bit more involved than we can cope with here, I think. Gareth says, I am 56 and receive £12,500 a year from a UK company pension. I'm a fiscal resident in Spain. I paid tax on that income in Spain. Tax-free allowance is less than that of the UK. Should I change to pay tax at source in the UK instead of in Spain?
There's no, as in the brackets. Again, it's probably one for a tax advisor, depending on region, depending on what other incomes you have. I'll be honest, it's an individual. Apologies.
Okay. It's a tricky one. Okay. Okay, so Michael has asked, you still have to pay 20% on any profit withdrawal from a Spanish investment. How can you avoid this? I think we say evade this if you're a tax person, but so you still have to pay 20% on any profit withdrawal from a Spanish investment. How can you avoid this? I think that's more of a tax question.
That's a good one. That's more along the lines of what I do. As far as tax efficient savings vehicles, that probably will just, be a simple restructuring of the assets in Spain, where, like my example earlier, you only pay tax on the gain element. So that's certainly worth a conversation to see what you've got in place and what alternative options may be better suited.
Okay. Okay, right. Here's a nice, easy question. Can we still pay into a UK pension whilst based in Spain?
I'm afraid not. You don't get the, you don't have the ability to do so or the benefits, and there's not quite a similar sort of setup in Spain. So generally speaking, the advice is to just put it into a Spanish tax compliant savings vehicle, like I touched on earlier. But no, the answer is you can't add to a UK pension, private pension.
Okay. Simon says, my wife is below retirement age currently, but will be reaching retirement in approximately 10 years after we relocated to Spain. She has a full qualification from national insurance contributions. Will her state pension entitlement be affected?
So she has a full state pension. That's fine. Assuming she's 57 years old.
I think so. What she's saying is, I think what he's saying is that she might not pay enough stamps on national insurance to get a full pension. So if you've moved to Spain and you haven't paid sufficient national insurance stamps, will you still get your state pension, your full state pension?
As long as you've contributed 10 years is the minimum requirement to have some eligibility. But you can back pay as well, like I said.
Okay. Right, hang on. I've lost all my questions. I have to go to the top. Okay. Joanne says, we are looking to move to Spain in 2 years' time. When would be the best time to start the process and speak to you? They're not going to be retirement age yet.
I appreciate you asking. Some people just jump the gun a bit and are moving in 5 years, and I can't help too much. Probably this time next year. If you're planning to move 2027, within 6 to 12 months, ideally, because other than that, there's not too much I can formally help with. You want to start the visa process, start the property search, I guess. From a financial planning point of view, it's worth having a chat. And by all means, email me or get in touch with me for some generic questions. But for a formal meeting, 6 to 12 months prior to the move.
Okay. Now we're going back to some questions to where we started. Gail has said, will I be taxed on a UK property if in the process of selling and I rent in the interim of buying I didn't say this way. I'm going to start again. Okay. Will I be taxed on a UK property if I'm in the process of selling and I rent in the interim before buying a property in Spain? Is this viable?
Depends what country they're in, but that's generally what people tend to do. I'm assuming still a UK tax resident, sell your main UK residence, no capital gains, rent for a bit until you move to Spain, if I'm getting that right.
Okay. Okay. So this one definitely isn't a pension question, but it's still interesting. Susanna asks, do you think over the next few years, more autonomous regions will ditch the wealth tax?
Fingers crossed.
Okay.
No idea.
There's so many nuances, aren't there? I was speaking to someone who was in Italy yesterday, and she told me, I didn't realize that if you move all your possessions over to overseas, you and you're not a resident, then you could be taxed on all that, on any art you've got, or any. They had a big wine collection, so there's so many things that you have to get the timing quite right. So I feel your pain, Susanna.
It's a good point, Susanna, though. But as far as like Andalusia, for example, if you we do that quite regularly. As far as if you have assets, wherever they are in the world, and in 10 years' time they're going to have doubled in value. What we look at is setting them up in those Spanish vehicles or those wrappers, because whatever the initial premium is, that's always what's going to be declared for wealth tax. It doesn't matter if in 10 years' time it's doubled in price. That initial premium is what's there for wealth tax, and it's reported. So, good point.
Okay. Linda has said, where do you have to register for your pension to be sure of receiving it abroad? She's 60 now and won't get a government pension until she's 67.
HMRC, I think that's a bit of a minefield from experience, but yeah, they're your slow process of a organization to deal with.
Okay. So, okay. Mark says, I am based in the UAE and have a co-ops. I've heard that I can take all of my pension tax-free while I'm living in the UAE. Is this correct, as I'm hoping to use this to buy a property in Spain?
Absolutely. Great tax jurisdiction is the UAE. Yeah, you can fully encash pretty much most assets completely exempt from tax. Again, I'm not a tax advisor. I check with someone locally there. But yeah, my understanding is.
How about you just explain very briefly, because we are running out of time, what is the difference between a SIP and a QROP? I think they're called ROPs now rather than QROPs, but anyway.
A ROPS is a non-qualified overseas pension. A QROPS is a qualified recognised overseas pension scheme. It's, as I said, a bit of a thing of the past. It was a government-backed sort of incentive that certain institutions could have these overseas pension facilities for people moving abroad, and there was jurisdictions like Gibraltar, Malta, Switzerland that you could hold your QROPs, and there was a lot of benefits in tax efficient planning and passing on monies. Now, if you have an existing QROPs, they're still favourable from a succession point of view and a tax, without scaring anyone who's in Spain or like our friend there in the UAE. Nothing wrong with the QROPs, but they're just unadvisable now. The difference on the SIPs are generally UK-based, self-invested private pensions. Some people have many various pensions from different occupations and so on. So having a SIP allows you to transfer all pensions into one easily manageable entity, like an international SIP as well. But that just allows you access to financial advice from the overseas point of view. So if you want support in growing the money, or a support in currency aspect, or withdrawals, or planning around the pension, then it's certainly something to consider.
I guess that's another question, is if lots of us have got lots of different pensions in lots of different places, is it best to put it all together before we plan on coming to Spain, or doesn't it make any difference? And can you help with that process?
Yeah, we have to look at each individual pension and see what benefits are attached to the pension, because our advice, if there is benefits of leaving it where it is, will always be to leave it where it is. We're not just going to move a pension for the sake of it. There may be instances where it's worth cashing out smaller pensions depending on the nominal tax rate. But yeah, that's part of the process of that advice. We look into what pensions you have, can we amalgamate them into one pension fund, and what are the options available.
Okay, now we got some really good pension questions coming in now. Let me ask this one. So this does touch on visas, but I'm going to ask it anyway. Sandra says, if you just have a state pension coming in, will you be able to live in Spain?
Yeah, it depends on the visa and what passport you have, again, I'm not an immigration lawyer. There's different types of visas you can come on. If you're looking for a non-lucrative visa, which is more for a non-working visa, there is sufficient requirements for income or savings. Now, again, I don't know off the top of my head. I think it's around 28,000.
It's 28,800, I think, at the moment. 36,000 for a couple. So clearly, a state pension isn't going to be that amount. However, you can, if you've got savings, you can, you can still get it. So if you had a property, you'd have to sell the property, I guess. So if you just have a state pension, which is what, 12,000 or so, you're going to struggle. If you can supplement it with savings and things, then you should be okay. Sorry to jump in there, Remy, and answer that one for you.
No, that's good. Yeah.
Okay, so Anthony wants some qualification. Wants to just nail this down. If I am 60, if I become a Spanish tax resident before the British state pension age of 67, does that mean I can no longer pay into my British state pension for the remaining years?
No, I do it. I'm a Spanish tax resident. I've backdated for the last 7 years. You can do it overseas. There's actually certain exemptions. Again, I don't know off the top of my head, but there may be reduced rates. But it's very much doable. You have a national insurance number. You log on to the HMRC. You get an account. You choose the years that you want to backdate. It'll give you a fee, and then you pay. Simple bill.
Excellent. Okay. I was enjoying myself so much. I hadn't realized that we've actually gone over time. So, and we still got lots of interesting questions coming in. So I am going to have to call a halt there, I'm afraid. So let me just say thank you. Thank you. Thank you, Remy, for such a really clear and insightful session. We covered so much ground. You've helped demystify a complicated subject, but you've also given us lots of things to think about. So, one question, one answer just brings up more questions. So thank you for your help. And I would really urge you, to everyone watching, if you like personalized support, we highly recommend speaking directly with Remy and the Holborn Assets team. They are experts in this field and will help you maximize your retirement finances safely and efficiently. Before we finish, if you found this session helpful, please do leave us a review on Trustpilot. It really helps to reach more people like you and bring the advice that they need. I think that's it. We have more webinars coming up. We also have our virtual event, which is Hoving Rapidly Interview. It's still 2 months away, but it's still worth thinking about registering for our virtual event. We can spend a whole day on sessions just like this. So that's on the 4th of October, and you can register now. So once again, thank you very much, Remy. Thank you for listening, and good luck in your journey to Spain. Thank you very much. Bye-bye.
Thank you.